Welcome back to Fast Market. I'm Alex Coffey alongside Kevin Hanks. Kevin, it's now time for our cash tag segment. We're going to take a closer look at the video game sector, a sector that had a really incredible tailwind as a result of the pandemic, but it has found itself in a bit of a downward spiral here. We'll see if there's any merit to this. Joining us here in studio is TD Ameritrade Network contributor Jenny Horn, and from LikeFolio.com, the co-founder Andy Swan is with us as well. Jenny, I'm looking at a couple of the big players within the space, Activision and Take-Two, both of them up very respectable amounts at the beginning of 2020, but also pretty nice haircuts here recently from their highs.
Yeah, I believe Activision has fallen about 20% off its 52-week highs, so that just goes to show really the slowdown we're seeing in video games, and it makes perfect sense to me. I mean, with the reopening trade, you do see a lot of these sort of stay-at-home stocks. People are just less interested in spending as much time at home. But I think there's a lot of other things sort of going on in Activision, actually outside of the pandemic. One being this negative news we're getting sort of from China with the ongoing regulatory fears, and the fact that they're sort of limiting the amount of time some of their citizens can spend on these video games, which I think is interesting. It reminds me of me when I was like 10 years old. My mom wouldn't let me play video games for a certain amount of time. But regardless, Activision still has very popular names like Call of Duty and Candy Crush, and they continue to be among some of the highest mobile grossing games. So I think that, it's important to not discount Activision just based off its recent price activity. But actually, a JP Morgan analyst recently just gave a report on some of this regulation coming from China and said that she actually thinks this will have very modest impacts on Activision and some of these other US-based video game publishers. She said basically that she thinks that, that these fears are overblown and
Jenny, it sounds like there's some audio issues, so they'll get that figured out. I just want to bring in Andy here to the conversation real quick while we get that figured out. Andy, when you're looking at this space, let's start with the space as a whole, because when you look at video games in general and you start to consider, was there a real tailwind here? I think it's clear, but is it sticky? Are they still playing video games if they had nothing better to do last year when they were at home? And now they're, they got some of their other things that they like to do back on the table. They can go outside and they can see their friends. Do they still play those video games?
Yeah, so, the key here, I think, is 2020 is very difficult to compare to for these companies and for the industry in general. So we are down from 2020 levels in terms of the number of people talking about playing video games. But if you compare it to 2019, there are really significant gains in this industry. And most notably for me is the gain in number of people talking about being new to gaming or introduced to gaming and starting for the first time, whether that's with an Xbox, a PlayStation, any number of different platforms and software. And so you see that up 65% versus 2019 levels, really holding quite well versus 2020 levels. And, quite frankly, this is the toughest time of year to be making these comparisons to 2020, because last year in 2020, there were very few youth sports. People were, significantly more out of work than they are now. And kids were a lot of times not going to school during the day, and they are this year. So I think that for the new to gaming segment to be up is really good sign for the longer term. But they do have incredibly difficult comps to overcome in the near term, especially if you're looking back at 2020. There's just no way that they're going to be able to maintain the levels that were hit when kids and young adults were stuck at home, through most of the day.
Andy, I think you're on to the key point for investors when they look at these names. And when you stack these numbers on top of each other, right? These companies are all doing better, but the question is the street, is the overall view of these companies, are they getting it wrong? Because all these companies got bigger, right? Their footprint got larger. There's more people playing these games. There's more people. I mean, your new to gaming number is absurd with how big it is. So isn't their pie just getting bigger? And I get the psychological, well, we were playing lots of video games, now we're not playing as much. Yeah, but they're not playing none, and they're
Right.
still playing video games, and once they start, they don't stop. So is the overall street on these names getting this wrong, I guess is my question.
Yeah, the other thing that's really interesting, you kind of alluded to there, these companies are actually getting better as well at monetizing their users with in-game purchases, upgrades. So just the other day, my son came to me and he plopped down $50 cash on the counter and he said, "Hey, I'm going to buy NBA2K using your credit card on Xbox. I'm going to download it." I said, "Okay, well, you've paid for it. That's cool." He goes upstairs. He starts to download. 5 minutes later, he's back down. He plops another $30 down and he said, "I'm going to upgrade to the Super HD version or whatever of this game." And I was like, holy cow. So Take-Two is really onto something here. They've converted a 14-year-old boy into a 60% larger price. And then there's these in-game purchases that he can make. So it's not just that, more people are coming into gaming. It's that these companies have really started to figure out the best way to capture share of wallet of those users during the game experience. And it's not like it was when I was a kid, when you went and you bought the cartridge and the game was the game for the remainder of time. These games can improve over time, and you can pay to make that happen. So I think the value of the companies will go up as they get better and better at monetizing this growing user base.
So Andy, is it making it difficult for some of these companies to actually have adoption of new video games? Because your son will just upgrade and upgrade his ongoing game. So then you're not really purchasing new games. So does that make it actually more difficult for, say, an Activision to compete with a Take-Two? Because once you sort of find your game you're loyal to, you can just continue to build off of that.
Yeah, I do think that's a challenge. I think the cool thing, though, is that, these platforms, Xbox, PlayStation, they've turned their platforms into marketplaces as well, so that the discovery of new games can occur right there rather than wandering the aisle of Toys R Us like I used to do. The discovery of new games can be there, but I do think that you're right. It does really compound the impact of locking kids into a video game franchise early on. And with what we've seen with Take-Two versus Activision, for example, we're seeing Take-Two do a better job of that. Happiness for Take-Two up considerably over the last little while peers are falling off. And so it's really more about keeping customers happy than it is marketing to them new games or new experiences, because you can monetize them throughout the experience.
Andy, first question in relation to the change in happiness here on a 90-day moving average. We know Activision also under a little bit of scrutiny for some internal work environment issues as well. Does that ever spill over into social sentiment data, people talking about the companies, and would that impact this score?
Yeah, we actually really haven't seen that sort of cultural phenomenon that's going on at Activision really impact these scores. We do a pretty good job of getting it down to just consumer mentions rather than general public mentions, so that helps. So we really don't see that having a material impact on Activision's actual business model. It may be keeping their PR team and their social media teams very busy, but in terms of the consumer, I don't see any large impact, which is typically the case with these types of events. And
then in relation to sort of what Jenny was alluding to, in the modern world of video games, from how you see it, where there really is such this continued, downloadable content to keep the games, somewhat fresh and monetized over time, it seems that the life cycle of successful video games is far longer now. Is there an added risk to the amount of development that goes into kind of unproven releases greater than ever now, like if for a flop release?
Oh, yes, absolutely. I think that, companies really have to think about how much they can put into the initial release versus how much they're going to have to support the game going forward and what kind of user base they have to get into it to begin with. That's why, a company like Roblox, that it takes a completely different route. It turns its community into video game developers. It turns its platform into a complete marketplace, very open, decentralized gaming platform. they have some unique advantages over Activision and Take-Two because of what you're referencing. They don't have to spend millions, millions, and millions of dollars just to get a game on the shelf or onto the Xbox platform. They've got the users there, and they're creating the games themselves. So really interesting business model that we like quite a bit at LikeFolio.
Yeah, and in relation to the other two, then, it sounds like RBLX might be maybe the top of your list when it comes to this particular space. But Andy, is this just one where you look at it in relation to the overall sector and they're all likely to gain from similar exposures? They all have kind of a headline game. As long as that game is still popular, they can benefit as long as people are playing. Do you look at it more as a sector as a whole, I guess is what I'm saying, or do you actually break it down company by company and issue sort of bullish calls here and maybe not so bullish other places?
Yeah, I do like to stack rank these companies because I think there is a difference in the consumer experience at each one of those. I'd put Roblox at the top of that. Right now, Take-Two, Activision, I would give the edge to Take-Two because of its consumer happiness gains recently, but Activision with the Call of Duty franchise coming out with an upgrade in November, that's going to be the really big deal when we'll see, is Take-Two's, lead over Activision really sustainable? Because if the Call of Duty upgrade is a flop, like we've been talking about, a lot of eggs are in that basket, and it could be really bad for Activision. But if it's great, then they could catch up to someone like Take-Two. So that's the constant battle that's going on. And we do like to look at who's winning, who's losing within this sector.
Good stuff. Andy Swan, thanks as always for taking the time and joining us here on Fast Market, the co-founder of LikeFolio.com.